Governor Walker and members of his cabinet toured northern Wisconsin last week. They say there's a lot of good economic news in Wisconsin, but that it's too often overshadowed by the bad. Stories about major employers, Oscar Mayer in Madison, Tyson in Jefferson, Joy Global in Milwaukee, either shutting down or laying off hundreds of people. While mass layoffs in the state are high, the state's unemployment rate is low, just 4.3%. So what's going on with this? We're asking Brian Jacobson, economist and chief portfolio strategist at Wells Fargo Funds Management in Menomonee Falls. Brian Jacobson, it's good to have you on the program.
Thanks for having me.
So we have these mixed economic signals. How do we explain that?
Well, I think oftentimes what you have to realize is that in any part of the economic cycle, there's good, bad, and ugly stuff going on, and it's just a question of which one outweighs the other. In a recession, it's oftentimes the job losses that outweigh the job gains. In an economic recovery, the job gains outweigh the job losses. So when you reference some of the layoffs that have been announced, those are obviously very important, especially to those area communities and the families that are affected. But if you look at the scale of the layoffs, there are oftentimes, dozens or hundreds of people, but yet in an economy like Wisconsin that has around 2.5 to 3 million employees, that actually is just a small percentage.
Are the layoffs a commentary in any way on the state's business climate, or is there something else going on?
Well, I think it's a commentary on a couple things. The biggest one being the global economy. If you look at the pattern of layoffs about where they have been in, it's mainly in, let's say, with Joy Global. They're very highly tied to growth in the emerging markets. Emerging markets, a lot of the growth there was funded and fueled by an increase in commodity prices. Since 2011, commodity prices have collapsed, and that's going to have some repercussions on companies like Joy Global. You look at some of the other areas, whether it's Tyson or Oscar Mayer's, sometimes it's a question of just making the company a little bit more efficient. It's also a question about demand. If you look at, let's say, poultry demand, a lot of that is also tied to exporting to other countries. And so if you have a slowdown in China or emerging markets, that can ripple over into affecting our economy here.
And our economy is dependent still on manufacturing to some extent and on exports. And when you've got a strong dollar, doesn't that have an impact too?
It does, yes. The stronger dollar, and actually the dollar has been strengthening since 2011, but it really started accelerating in 2014, probably because people were expecting the Federal Reserve to start hiking interest rates at some point here towards the end of 2015, early 2016. So it strengthened the dollar. Also, the dollar is strengthened because the U.S. economy, people just want to buy our assets. So it's kind of a testimony to people wanting to invest in the U.S., but it does have these consequences. In economics, you're always taught everything has a trade-off. You've got the positive, you have the negative. The negative thing is it's going to hurt some of the exporters. When we're exporting machinery to a foreign country, if it's suddenly you have an exchange rate move, it's either less profitable to export it or they have to lower the price to stay competitive.
I wanted to ask you about something that came out last week, and that is a report that said median income in the state had fallen, and fairly significantly over the last 6 or 7 years. How much does that play into the psyche of the people of this state?
Yeah, a lot of economics is about the psychological dimension, about how people are feeling. John Maynard Keynes referred to it as animal spirits, just kind of, are people confident or not? And people aren't that confident in this economic recovery. From 2009 to 2015, that is inflation-adjusted income has declined. But this is a nationwide phenomenon. Now, part of it can also be explained by the changing composition of households. So when you're looking at household income, are there 2 people there or are there 3 people there? So household size has actually shrunk a little, so you should expect a little decline. But the fact of the matter is, it's just income gains haven't really been there, but it's not just Wisconsin, it's actually a nationwide thing.
Given the structure of our economy, some of the industries that we're dependent on, what's realistic in terms of growth for the state? Are we going to be inherently a slow growth state?
A lot of it depends upon the demographics. From 1990 to this year, the population in the United States has grown by about 29 to 30%. In Wisconsin, it's grown 17%. So our population just isn't growing. The age structure of the population pretty much mirrors what it is nationwide. The industries that are here, we're about 20% manufacturing, where the nationwide average is about 10%. So we're a little bit more manufacturing, but that doesn't have to be a slow growth area. I think a lot of the slow growth that we might expect out of Wisconsin is more a function of just the population dynamics and not a reflection of industry here.
How do we change, as an economist, when you look at the state? We're still very low in rankings in terms of entrepreneurship. Does that have to change for us to be more successful?
I think it does, yes. Most job creation and job destruction comes from new businesses. And so if you want more of the job creation, how do you create an environment in which entrepreneurs are willing to take on that risk? One of the things that could help is maybe changing the business tax climate. According to a lot of surveys, the Tax Foundation has done some rankings about states. Wisconsin is about 43rd in the nation as far as the business tax environment. And it's a function of many different things as far as the corporate income taxes, individual income taxes, property taxes, unemployment insurance, and sales taxes. And so maybe you can change the mix a little bit to create a little bit better environment. But the thing is, there is no quick fix to it. This is something that you do a policy now, you do what's right now, and anticipate that it's not going to have an effect or a noticeable effect maybe for a few, if not maybe a dozen years from now.
Brian Jacobson is an economist. He's a chief portfolio strategist at Wells Fargo. We appreciate having you on the program.
Thanks for having me.
You bet. Wisconsin has a high-profile race for Supreme Court next year. I'll be talking with candidate and trial attorney Claude Covelli. That's next on Upfront.